Let's get into some business here on Newsfeed PM. Finance Minister Enoch Godongwana will update the nation on how the country's purse is being managed when he delivers the medium-term budget policy statement in Parliament on Wednesday. The MTBPS, or mini-budget, is essentially the Treasury's report on the country's spending plans for the next 3 years, while it shares how the government plans to make more money through revenue for the fiscus. Now, top on Godongwana's agenda will be how the country will pay back the almost R500 billion in debt, funding social grants, cutting costs and still spending enough to boost economic growth. This week's speech will be Godongwana's first after the Government of National Unity was formed this year. Joining us to unpack what's expected from the Treasury Minister is Tertia Jacobs, a Treasury economist at Investec. Just looking at how the year has gone, Tertia, let's first clear the politics. Government of National Unity, there's a newly formed government. Do you think this will affect the budget in any way, looking at the spending plans on things like education, things like the water crisis in the country, and also the SOEs?
Hi, hello, Matteo. I think, your introduction in terms of what you flagged, what this new GNU can achieve, is very important. We have seen a major re-rating in the financial markets. For example, the rand has rallied and government bond yields have declined in the aftermath of the formation of the Government of National Unity. So that is very important for government's funding costs, which have been very elevated, when there was a high level of uncertainty about the political outcome. And then, of course, the fact that the economy is stagnating, it's not growing. So from that perspective, I think the MTBP, the context in which the MTBPS will present it is better. But as far as that envelope of spending that you talk about, the fiscal consolidation has to continue, because South Africa's debt to GDP levels at 75% of GDP is just so elevated. So it's a big balancing act in terms of how the minister allocates this limited resources.
You talk about that positive sentiment. The big talking point last year was the cost-cutting measures Godongwana emphasized in the budget because of revenue shortfalls that the country experienced. Do you expect him to still be as tough this time around?
Matteo, so this is the medium-term budget policy, right? I think the big one for those changes will be the February budget. So I think in terms of our expectation for this budget, we see minor allocations, for example, to some of the weather setbacks that we have experienced. It will be interesting to see if there's going to be any financial assistance to the post office. We don't expect any announcement of wage increases. That's, going to be more of a next year's story for the new fiscal year. So I think there's not going to be major announcements. And also, a permanent social relief of distress grant is only likely to be announced in February. So I think that this budget, we don't expect, meaningful announcements around the expenditure framework.
What do you think the market will be expecting to hear then from Godongwana come Wednesday? Because, as you say, the rand has strengthened. We've seen how the bond yields have moved as well. There's a lot of positivity after the formation of the GNU, but the real economy speaks in terms of the numbers that he'll be sharing on Wednesday.
So that is such an important dynamic that we're watching. So first of all, the South African economy is getting ready to enter a cyclical upswing. We have seen a meaningful moderation in inflation. Interest rates are starting to be reduced. Consumers' real disposable income is now looking a bit better. And of course, there's people that's withdrawing from the two-pot savings withdrawals that are now from the two-pot savings pot that's now available. But as far as the structural growth story is concerned, I think, Operation Vulindlela has been very busy with, removing some of the blockages in the network industries, like we see in electricity generation. There's been a lot of improvement, in generation coming from renewable energy. I think the freight story is something that's lagging. There has been changes. We know that in freight, there's been a split between the infrastructure manager and the operational side. Yet, we're struggling to increase volumes, right? So I think what we're looking at is what will be announced about regulatory reforms and making it easier for public-private partnerships to drive fixed investment, because ultimately it's the PPPs, the private sector's involvement, that will be driving an increase in private sector fixed investment in the network industries that's critical to lift this GDP growth rate, to lift the potential GDP growth rate going forward. So we'll be monitoring to see what's happening there, what progress is going to be announced there. And that could potentially open the door to an acceleration in fixed investment into 25 and 2026.
You've already touched on it. Individual taxpayers are contributing a lot to South African revenue services, money that is eventually used in the budget. Looking at potential revenue expected from the two-pot system and the higher corporate taxes charged this year, do you expect revenue to meet expectations instead of the shortfall we saw?
So, Matteo, what we have seen during the first 5 months of this fiscal year is that there's a slight lag between the budget and the outcomes. So usually in the second half of the fiscal year, there is a bit of a pickup, and we can perhaps see that coming through if consumer spending starts to increase. I just want to flag here what's also going to be a big drag on growth is fixed investment this year has declined, which means imports have been lower, and that has reduced import duties that's been paid to the fiscus as well. So that's another dynamic playing out. I think an interesting dynamic that we are watching is, as you flagged, the two-pot withdrawals, because if it's Treasury has penciled in withdrawals of about 20 to 40 billion rand. We have seen numbers of estimates between 50 to 80 billion rand. And if you withdraw your pension fund savings, you pay tax at the marginal tax rate. So that can, if the outcome is higher, that will also be additional outcome for Treasury. So I think all in all, we do expect a shortfall, but it might be small.
150 billion rand Treasury dipping into the country's emergency reserves this year to try and plug its budget shortfall. Do you expect any, looking at JFECRA or any other reserve funds, to make sure that Treasury has enough to spend over the next 3 years?
No, I think the JFECRA withdrawal, we have 100 billion this year, and then the outer 2 years of the MTEF framework, we've got 25. So I think that is going to hold. I think the big dynamic here to watch is we think it's actually bought time for the government to enact those structural reforms, because utilizing or accessing the JFECRA balances has actually moved South Africa away from a fiscal cliff, where we stood in the beginning of this year. So we need to get growth going. We need to so the government can collect more taxes. Otherwise, in a couple of years down the line, we'll be having the same conversation that we had in February.
Now, despite walking that tightrope on spending, Finance Minister Enoch Godongwana still needs to spend to have the economy grow. And not only that, but to also make sure that in terms of services, government can make sure that they deliver on those services. There's the grants, and as I mentioned earlier, the water infrastructure in the country that needs an urgent looking at. Where do you think he puts the money and he spends the money for government to grow?
At the moment, Treasury is trying to balance. We have seen, an increased allocation to social relief of distress grants. So the social grants in general have remained the same. Then at the same time, where we discussed, the importance of increasing fixed investment, because that's going to be the big driver of growth. They've tried to allocate more funds to CapEx as well, to infrastructure spend as well. But the problem here is, when you talk about where else can they spend, we have conditional grants being paid to municipalities. The problem there is that many of the municipalities don't generate enough revenues, right? They don't collect the revenues. So we also know, for example, that they own Eskom like 85 billion rand. So they don't generate adequate revenues, and then they cut back on their maintenance budgets because they don't have the revenues. And then a lot of the conditional grants that government allocates to municipalities also gets underspent because there's not the competence. So there's major issues in terms of so the answer isn't always to allocate more funds. It is how do we deal with what we've got, because there's a lot of things that needs to be fixed that's sort of obstructing growth as well.
We still have two elephants in that room. Well, for me, that is looking at bailouts for SOEs. We've seen SAA saying they don't owe anybody any money anymore. We've seen with Eskom keeping the lights on for the good part of the year. But you've also spoken to Freight and how Transnet needs to deal with that urgently. Do you expect any bailouts? And on the public wages side, to spend more on salaries for civil workers?
So I think, first of all, Transnet, we know that state capture has left a hole in the balance sheet of between 60 to 70 billion rand. So Transnet needs new capital to be able to increase fixed investment, to fix the rails and so on. So that's also where the private sector will come in. But that hole of 60 to 70 billion is challenging. So I think Treasury doesn't yet want to allocate any funds to Transnet because we don't know what the end state of Transnet is going to look like. So I think we don't expect any transfers to Eskom in this budget, but we have to see. It is perhaps there on the horizon. So that is something that will unfold. The second thing, as far as the public sector wage bill is concerned, Treasury has penciled in a forecast for over the MTEF of 4.5%. We know that the inflation outlook has improved significantly. For example, September's inflation rate receded to 3.9%. So wage negotiations are currently taking place, and the start of the new fiscal year is April 25. So I think we'll get an announcement in coming months, and that will be incorporated probably into the February budget.